Hey folks, Rachana Ranade here, and I welcome you all to a very interesting IPO summary video of SBI Funds Management Limited, which was incorporated back in 1992 and was appointed as the investment manager to SBI mutual funds after receiving SEBI approval back in 1993. Now, this company is a joint venture between SBI, which is India's largest bank, and Amundi Asset Management, which is one of world's leading asset managers. And that's how there is a very strong combination of domestic reach with even global investment expertise. So as usual in today's video, we're going to talk about what does the company do. We'll talk about the financials, we'll talk about the peer comparison, we'll talk about the industry analysis, we'll talk about the risks and litigations, about the IPO details, and so much more. So video is going to be extremely educational, very informative. Keep on watching the video till the end. All right, so now let's get started with the very basics as to what does the company do. In simple terms, it's an asset management company. So for those who know what it is, fantastic. For those who don't know what an asset management company is, how do they actually earn money? For that, let's take a very simple and quick example. Okay, let's say we have a lot of investors who want to invest in different mutual fund schemes. This company is an AMC which has a lot of experts, fund managers basically, who will decide which stocks are to be bought, when are they to be bought, when to sell them. If it's about a debt mutual fund, then which debentures are to be bought, which bonds are to be bought, when to sell them, and all that, right? So is AMC going to do all these things free of cost? Answer is absolutely no. There could be, I mean, there is typically an asset management fee, or it could depend. So something like a management fee or something like a commission, right? Which can range somewhere between 0.5% to 2%, depending on which product it is. And the best part is that they receive this as a management fee, right? So even if market rises or market falls, whatever percentage they are going to charge, they will charge that as a percentage of AUM. So in our example, let's say investors invested in different schemes of SBI mutual fund, and assume that they invested 1,000 crore rupees. And as an example again, assume that the AMC charges 1%. So 10 crores is going to be the management fees that SBI mutual funds ka AMC is going to receive. That will be irrespective of whether market goes up or whether the market goes down. But in our example, I just told you that there could be a mutual fund, but how many types of mutual funds or how many different investment schemes does this company have? So SBI Funds Management has 128 different schemes which are across different asset classes. And if I were to just give you an overview of the product portfolio, that's how it looks like. I'm not going to read it out all, but you will see equity schemes, debt schemes, ETFs, you'll see fund of funds, you'll see liquid schemes, overnight schemes, arbitrage funds, and very important, they also have one SIF wherein they are the market leader. Okay, so they have both, whether it's an open-ended scheme or close-ended scheme, they have different categories as well. So now what we know is, okay, they have a very diversified product offering, but we also have to understand how does their overall AUM look like. Okay, quarterly average asset under management, that is QAAUM, is typically a disclosure that is given. So for that, have a look at this chart. Now if you see here, the total mutual fund QAAUM with them is 12,509 billion rupees, right? And if I were to add up PMS, advisory, AIF, that is alternate investment funds, all these put together, it comes up to 16,944.64 billion rupees. So it's again a nice split between how much QAAUM, that is quarterly asset under management, they have for the mutual funds, and how much for the alternate QAAUM, right? It's a good split. But if I were to understand about how much revenue they receive from what, they will receive revenue, as I told you, it will be like fund fees, management fees, something like commissions, right? Advisory fees. So they'll have different revenue sources. It can be mutual fund management fees, PMS fees, AIF fees. It could be advisory mandates, offshore fund management. It could even be international advisory services, because they do have global investors as well. But one point to note here is that mutual fund management fees, almost 80% of the revenue comes only from this segment. Okay, now one more point that you might have understood till now is that they are going to get a management fee. So higher AUM is equal to higher income from this for this company. So in the next sections, of course, we are going to talk about how much AUM they have as compared to their peers and all that. We're going to discuss that. But whom do they cater to is one more point that we'll first discuss. Of course, as I mentioned, they'll cater to retail individual investors, where we'll have first time investors, we'll have SIP investors, salaried individuals, whatever, right? Then they'll cater to HNI clients also, be it PMS, be it wealth management. They can cater to institutional investors, where they can manage pension funds, insurance related things. They can manage provident funds related investments, banks, corporates. All these institutions also they can cater to. They have a lot of investor base, even at a global level, be it Europe, be it Japan, Korea, Australia, Middle East. So they have a big customer base. But question is that how do they actually reach out to their customers? What channels could be present through which they can reach out to these customers? There could be basically two types. One is physical, one is digital. If I'm talking about physical channels, it could be obviously SBI branches, which is going to be one big contact point for this company. It could be financial advisors, it could be national distributors, it could also be other banks, right? And if I'm talking about digital channels, it could be invest app, then it could be a Yono, it could be SBI website, it could be different fintech platforms also. So all in all, I can say that because this company has an omni-channel strategy, they can actually reach out to a big customer base. Now that you have understood, okay, this is primarily an AMC which earns management fees based on the AUM size. You have also understood to whom do they cater to. In the next section, we'll talk about the industry analysis. Now let's start with the industry analysis. The sheer size of the industry QAAUM, that is the quarterly average asset under management, that has reached a mind-boggling number of 81.5 trillion rupees as at March 2026. Now, what has been the growth rate for this industry from financial year 21 to 26? It has been 20.5% CAGR, and in fact, it is expected to continue growing at 16 to 18% CAGR till financial year 2030. Now, who is driving this growth? It is actually the retail individual investors, retail and HNI investors, who are the biggest driver in this growth. In fact, they contribute over 60% of the mutual fund AUM, and which is supported by record SIP inflows of 3.5 trillion rupees during 2026. Now, who is actually driving this retail individual investor growth? It's not only B30, that is the it's not only the T30, which is the top 30 cities. It's beyond the top 30 cities as well. Basically, tier 2, tier 3 cities are also the big enablers for this growth, because they are considered to be the next major growth engine. Why? Because there is also a higher disposable income out there. Overall distribution network is increasing there, and of course financial literacy amongst even tier 2, tier 3 cities is increasing. Okay. And all of these things, if financial awareness, financial literacy increases, obviously people are going to understand that there is a need to financialize our savings. And in fact, as a result of multiple factors, we saw this, that the household investments in mutual funds grew at an exceptional 42.6% CAGR from financial years 22 to 2025. And this is a very clear indication of a shift away from traditional bank deposits towards market linked investments, right? So I hope the industry analysis is absolutely clear. In the next section, we'll talk about financials. All right, now if you have a look at the financials, there has been a continuous increase in the revenue from operations, that is the management fees, asset management fees. In fact, revenue grew at a CAGR of 27.72%. If I'm talking about the EBITDA grew at a CAGR of 22.18%. And if I'm talking about PAT has also grown very nicely, and PAT has grown at a CAGR of 21.64%. All these rupees that you can see on screen are rupees in millions, by the way. Now, there are also some other KPIs that you should track. KPIs are key performance indicators. We also have to understand the logic behind that, right? So, if I'm talking about QAAUM, what do you think? Higher the better or lower the better? Obviously, it's higher the better, because bigger the base, they are going to earn more commissions, more fees, and that's how their top line can increase. So, of course, I'm not going to read all the figures one by one. I'm going to round off the figures. All these are rupees in billions. So, if you see here, the total QAAUM has increased from 22,000 billion rupees to 26,000 to 29,000 in 2026. Now, they have also given a split here, be it equity oriented, fixed, liquid, passive. have a look at all the figures. If you want, you can pause the screen and see that every single number has been increasing on a year on year basis. Even if you check the PMS and advisory QAAUM, that is also in an increasing trend. Now, there's also one more point that you can look at, which is the non-GAAP financial KPIs, which is the operating profit margin. Again, you can see our operating profit margin has been continuously increasing from 0.21% to 0.25% to 0.27%. Even if I talk about ROE, that has been increasing 36.05%, a slight dip in 25, and then at 2026, it is standing at 43.02%. Now, let's also do a quick peer comparison. If you remember, I had already told you that for any asset management company, what is very important is the QAAUM. Now, have a look at this. These are all the peers that they have mentioned in their RHP. And if you see, be it any year, March 21, 22, 23, 24, 25, 26, look at just to give you a quick overview, right? Rupees in billions, just look at the first number. So 5,000 billion rupees. So is this the highest in the category? Yes. 26 highest in the category. 22 March 22 highest in the category. 23 again highest. 24 same. 25, 26 also, if you can see, they are the very clear market leaders as far as the QAAUM is concerned. Even if you check the market share, it's highest amongst its peers, and it stands at 15.3% as at FY 2026. The CAGR also stands at 19.9% from financial years 21 to 26. Well, now that you have understood about the financials, about the peers, in the next section, we'll talk about risks and litigations. Now let's understand about the risks that are spelled out in their RHP. The very first risk, they say that their revenues and profitability are directly linked with QAAUM. And if there is any material decline, of course, so if the QAAUM declines, why? It could be because of market movements, it could be because of redemptions, any other factors, then it can significantly impact the revenue. Because if we see our management fees as a percentage of total revenue forms a huge chunk, 96.47%. Okay. But is this risk only related to this company or the entire asset management business as a whole? I feel this is a business related risk for the entire AMC industry, right? The second one that they are mentioning, that a big portion of their mutual fund QAAUM and the revenue from mutual fund operations is concentrated in a limited number of schemes. And if there is a redemption in these schemes, then could it impact their business? Yes. So just to give you some idea, the total mutual fund AUM ka how much percentage is held by the top 10 schemes by mutual fund. So 59.47% of the total AUM belongs to the top 10 mutual fund schemes. Okay. So is there a decent enough concentration here? It is. And also we have to understand that how much revenue is generated from these schemes. Here you can see, as a percentage of total revenue, 46.45% of the total revenue is generated by the top 10 schemes. So again, there is a concentration risk here. One more point that they have mentioned is about how much of their dependency is on the distribution network, because again they have mentioned that how much percentage of their AUM comes from the top distributors. Let's say if I'm talking about top 5 distributors of monthly average asset under management, 25% of the total MAAUM comes from the top 5 distributors. If I'm talking about top 20 distributors, it is 28.41%. So again, this point talks about the concentration risk. One point again that they have mentioned is how many of their mutual fund schemes have underperformed relative to the benchmarks and peers in the past 3 years. And they say that if this underperformance continues, then it could lead to investor redemption, difficulty in retaining and increasing their QAAUM. They have very clearly spelled out for themselves as well. If it is about SBI AMC, how many schemes have outperformed the benchmark? It is 54. But how many schemes that have underperformed the benchmark? It is 25, right? So all these were the different risks that have been spelled out in the RHP. Litigations, again, nothing specific to discuss. If you want, you can obviously drill down into the RHP, but nothing to be paying specific attention to. Now let's look at the valuation. If I'm talking about ICICI Pru, the PE stands at 49.38, HDFC stands at 41.71, Nippon, that stands at 51, Aditya Birla, it stands at 34, and UTI stands at 31.57. Of course, all our asset management companies. But if I were to check the PE for SBI at the post IPO valuations, that stands at 36.04, and which is lesser as compared to these names like ICICI, HDFC, and Nippon, right? If I were to understand about the IPO details, issue opens on the 14th of July 2026, closes on 16th of July 2026. Price band is 545 to 574 per share. The only thing is that it's 100% OFS. Total issue size is 11,693 crores. 100% of that is going to be offer for sale. Of course, when it is about offer for sale, the existing promoters become the selling shareholders. So, in simple words, it's as good as the main company does not. So, SBI Funds Management will not get any money in their own account. It will be the selling shareholders who will receive the money. But I hope all in all you have understood a lot about the company. We started right with what does the company do. We understood the financials, peer comparisons. We understood the industry analysis, risks, and the valuation part, the overall IPO details. I hope you found a lot of value in today's video. If you did, please don't forget to smash the like button. Please don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.